Wow, what an amazing bullish signal has just been triggered. It has just been triggered like this weekend, and we're getting an amazing bullish signal here for the next few months, right? What is it? What is this bullish signal we're talking about? Well, it's this one. Can you recognize what that is? That is basically, you can see, you know, this is on TradingView. What does all that mean? I spoke about this in my last video, but essentially what it means is basically every time when this signal triggers, which it just did, then the Federal Reserve, is about to go into end QT, end quantitative easing. For guys who don't understand, QE means they're going to literally print this, turn on the printer at the Federal Reserve. We all saw how big that was during 2020 and 2021, how big that bull market was. And the opposite of QE, of printing dollars, is called QT, quantitative tightening. And the Fed has been doing that for the last 2 years, 3 years now. And that's why the markets, crypto, especially altcoins, have not been able to make a real good move. Altcoin season has almost kind of never really arrived. But now they're going to end QT and start QE, which is printing dollars. I'm sure a lot of people will disagree and say, oh, Pablo, just because this is a signal for end of QT does not mean they'll start QE, which is start printing dollars. But oh boy, they will. I'll show you the evidence why. But before we get to that, let's first answer the question quickly for 30 seconds of which crypto exchange does Pablo Jimenez use? Well, Pablo uses this exchange, which is essentially non-KYC. That means you don't need to show your ID. You don't need to, the exchange can't even see who you are. That means the IRS can't see you. The tax office can't see you. The FBI, the CIA, nobody can see that it's you. And I like them so much, I made this deal with them, basically up to 8,000 USDT of rewards just for newbies for joining and starting to trading, right? It's already the largest non-KYC platform in the world with 1.3 million users. And if you're watching this on YouTube right now, then the link is in the description below. Pablo's link is in the description below, but only on Pablo's link. But if you're watching on some other platform, such as this one, then basically go to my profile page and it's on the Stan link. We click on the Stan link and it's the first thing that pops up because this is a big deal, right? BitUnix. Okay, so back to the markets. Just keep in mind, guys, only on the Pablo link, only on the Pablo Jimenez link, this offer. Okay, this signal we're talking about here is basically, it is the US 3-month yield divided by the US high yield bond spread. I spoke about this in my last video. What this essentially signal means is basically that the the junk bond market funding is blowing up, right? When this number goes down, crosses 100-day moving average, and within about 5 or 6 weeks after this happened, this was 2019 in July, by September the 2nd, the Federal Reserve had already stopped QT. I'll say that again. They stopped QT, right? And I would say that is as good as QE starting, or printing dollars starting. We all know how powerful that is. Not only so, it also indicated the start of the bottom of Ethereum versus Bitcoin. If you don't believe me, let's have a look at it right now. When did Ethereum versus Bitcoin bottom? Right, the whole reason why we're not having a bull run right now is because ETH versus Bitcoin is not up and running yet. Now, imagine if ETH and Bitcoin were to bottom. Now look at this. When did it last bottom? When was the last time it bottomed? Have a look at this. I'll put it on logarithmic. It bottomed here, right? What was the date? 2nd of September 2019. Where did they give the signal? July 2019. 2 months later, ETH versus Bitcoin bottom. We've had the big bull run, and then now ETH underperforming Bitcoin for all this time, and we're coming to this bottom level again. So a popular saying that has been going around on internet lately is that Ethereum is going home, and they mean that, you know, Ethereum's going home to around, you know, the 0.020 level or even 0.016 level, Ethereum's going home, and then basically the bull market starts again. So now we have Ethereum versus Bitcoin not only going home in terms of price, it's almost at double bottom level, but also in terms of timing as well. Because last time when it bottom was almost on the exact time when the Federal Reserve ended QT and started QE. And now I'm telling you guys they're about to also again end QT and start QE, but why? Okay, here's why. This is the explanation. Look at this. This chart in blue is basically the asset balance sheet of the Federal Reserve. In other words, it's basically a measure of how much the Fed is pumping or printing dollars into the market, how much liquidity, how much money it's injecting into the worldwide markets, well, into the US markets, US economy, US banking system, right? When it goes exponentially up like this, that was what, 2008, 2009, when there was a banking crisis. We all know there was the GFC, right? And we can tell because the purple line is the SP 500 Spider ETF, and we saw it cratering. And as soon as it started pumping, dollars into the US economy, printing dollars, right, so to speak, the SP 500, the economy accelerated, and that's when Bitcoin took off as well. And then this was the last time they did QT, is when they're reducing the liquidity, the money they're putting into the economy. Look at this. And then what happened was this. Okay, look at this. Yeah. Look at this. So the amount they were injecting into the economy was going flat and then a drop. They're actually doing QT, which is taking dollars out of the economy, taking liquidity, taking money out of the economy. And look what happened. The SP 500 went from Spider ETF, went from 290 during that time to, by the time it finished, back to about 290, 300 area. Well, 290, 300 area. The market virtually went sideways during that time. Last time the Federal Reserve did QT, or quantitative tightening, which is essentially taking money out of the economy. Now, and watch what happens again when they did money printing, which is QE. Look what the SP 500 did, right? Look at that. It went into explosive territory, right? So QE, this is QE. That big crash was the COVID crash of March 2022, March 2020. We all remember that. So that's how big, the this QE thing and QT thing is. Now, I'm sure a lot of folks are quite educated and quite smart, and they'll say, Pablo, you don't know what you're talking about. You're getting your definition wrong. QE does not mean QT. End of QT does not mean QE. End of QT just means the Fed stops, taking money out of the economy, but it does not mean the start of QE, where they inject liquidity money into the economy. That's a whole different ballgame. That's a whole different other thing, right? It's just because they end QT does not mean they start QE, which is really bullish. I agree. Officially, that's not what it means. But have a look at what the Fed has done in the past. Last time they ended QT, it was actually the start of QE. Yes. I did not stutter. Just look at the chart with me. Okay, let's have a look. I'll enlarge it right here. Remember, last time they started QT, they ended QE with which date? It was September, around here, September, right? Early September 2019. So essentially, you can see the date, early September 2019, right? Around September the 2nd, starting that week. Now, when did QT end? It was basically ended early in September 2019. Now, that was the end of QT, but it wasn't the start of QE. QE is when they start printing again. Why am I saying that that we're going to get QE now? Okay, the reason why is because this kind of a move. Do you see how the Fed asset balance sheet went parabolic here? This is due to the COVID crash. We can see it in the purple line. That's the SP 500. It went parabolic. That's what they call official QE. Officially QE. This part is what they call stealth QE, which means they are doing QE. They're printing dollars. They're just doing it in a very sneaky way, and they don't admit it. They call that, I call that stealth QE. But you can see that, well, the facts don't lie. The Fed's asset balance sheet went from 3.76 trillion up to 4.18 trillion, which is like a $420 trillion move, $420 billion move in a matter of 4 months, right? Less than 4 months, it went up $420 billion, which means the Federal Reserve injected $420 billion into the economy in less than 4 months, right? That's what you just saw on the charts. But how could that be, Pablo? How could that be that the Federal Reserve said they're not going to do QE? They said until interest rates come down to zero, right? Until interest rates are right now like what went from 5.5% down to 4.5% right now. US Fed funds rate, until it comes down to zero, why would we do QE? Why would we print dollars when we still can use the tool of lowering interest rate? That's what Jerome Powell just said literally about 1 month ago. You're right. They're not going to do official QE until interest rates are already at zero and they have no more room to stimulate the economy. They're running out of tools. They're running out of weapons. But what I'm talking about is stealth QE. I just showed you guys. They're still, right, pumping a lot of dollars into the economy, all right? $420 billion in 4 months, which is something like over $100 billion per month of pumping dollars into the economy. They just don't call it officially QE. What is it that they're doing? Why do I call that stealth QE? Well, the Federal Reserve are still buying treasury bonds or mortgage bonds during that time. And you might remember there was a program that the Federal Reserve had to rescue American regional banks called the BTFP program. BTFP. If you're not familiar with it, Google it. It basically means that all these banks bought all these US Treasury bonds during the COVID era of the last 3 or 4 years. And we all know that bond yields have shot right up, which means bond prices have just tanked. And when bond prices tank, then all these banks are holding onto our bag holders onto US Treasury bonds, which have gone down 30 to 50%. That's a big deal for a bank, because if they put like $100 billion into US Treasury bonds, now that $100 billion of depositors, customers' deposits, money, is now down from $100 billion down to $60 billion, meaning they've lost $4 billion. So the BTFP program, for example, is from the Fed to buy those bonds back from the banks, the big banks, at par value, which means they will buy it at the original price, not at the current market price. In other words, if they sell all of the $100 billion worth of bonds at the market, the bank would only get $60 billion back. They will lose $40 billion. But if they sell it to the Fed will pay $100 billion for it because they pay at par value. And the Fed, but of course, you know, it's not for free. That's not a free lunch. The Fed says, then you have to buy it back from us 1 year from now. It's only a rescue. It's an emergency rescue loan. So when a Fed does stuff like this, that's kind of like QE, because the Fed is buying bonds and injecting liquidity, right? More and more liquidity into the US banking system and into the US economy. They just don't call that QE. Do you understand what I'm saying? Okay, if you still don't understand what I'm saying, I'm going to use one quick and simple example that everybody, even a 5-year-old, is going to understand, to explain to you what this means, how bullish this is. End of QT equals QE starting. And I just showed you guys that Ethereum versus Bitcoin also bottoms at this period. Now, we are expecting the Fed to end QT in the next 4 to 8 weeks, right? So here we go. The analogy is this. There were, imagine if you have a family swimming pool in your backyard. And in that backyard, you have a tap, you can turn on the water, that's the liquidity coming in. Or you have a drain, you can drain the water out, and that's liquidity going out. That's like the economy. And how the Fed pumps liquidity into the market and takes liquidity out of the market, whatever they need to do. For the last 3 years, they've been taking liquidity out. When they stop the drain, when the liquidity stops flowing out and liquidity stays stable, is end of QT, right? The swimming pool has no more water going out, draining out. But they do not turn on the water tap coming in, which is QE. So people are like, well, Pablo, you're wrong because there's no more water coming in. But get this, if you leave your house for like a couple of days, you go on a weekend holiday and you come back to your house and you look at your pool and you say, oh my God, the pool water has gone up. But I did not add any more water into the swimming pool. I didn't turn on the tap. I just turned off the drain. This water level should be the same, should be equal, should be the same as when I left the house. No, but it's gone higher. Why is that? What has happened? Rain has happened. Raining. Yeah, you didn't turn on the tap. You just turned off the drains, but it's been raining. So water level has gone higher. That means there's more liquidity in the markets now, in the economy now. In fact, the Federal Reserve has a name for this. They have a name for it. They call it organic increase in asset balance sheet, right? That's literally the words that Jerome Powell uses. He calls it an organic increase, right, in the Fed's balance sheet, rather than them saying, oh, we're officially buying bonds to inject liquidity on purpose. It's just organically increasing. It doesn't matter what they say. Whatever happens, basically, we are seeing any sort of QE is great for the markets, right? Obviously, this sort of vertical QE, right, made SP 500 go up like this and made, Bitcoin just shoot right up. But even if that doesn't happen, even if we just get like this, right? Like this, what they call organic QE, look what happened. As it goes up, the SP 500 still went on a big run. And that was a big run for Bitcoin as well. But most importantly, as I keep on telling you guys, the biggest difference this makes of all is basically ETH Bitcoin, right? Now, the biggest difference of all, so far the biggest complaint from everybody has been about, oh, we're not getting an altcoin run. Well, we kind of did have 2 altcoin runs, but they only last like 2 months or 3 months, and then they ended. But the last time ETH bottomed against Bitcoin was exactly on September 2019. And that was exactly the time when QT ended, early September 2019. So obviously, this is a very, very important time to basically watch out for. As you know, guys, I was basically like the only one who was crazy enough to predict that the Federal Reserve was going to end QT 7 weeks ago. And we can see it right here, right? Basically, this was like, somewhere in late February. And I said, Pablo predicted 2 weeks ago that Fed was going to end QT. And that wasn't, that wasn't even the first prediction. This was the first prediction, Feb 9th. I just made many of these saying that the Fed is about to pump crypto and stocks because they're going to, end QT. The June end date of QT is, I said a bullcrap date from lazy influencers who wouldn't do any research, right? So basically, I've been on top of this for all this time. QT is going to end, I think on this Wednesday. The Fed will probably say something towards saying we're going to end QT. They may not do it. They may not carry out the action until April or even May, but it is coming in the next few weeks. And when it happens, in the past, Ethereum bottoms against Bitcoin and Ethereum starts gaining on Bitcoin, that's when the altcoin bull season happens. Okay, so I'll keep you guys updated on this. For all the Aussies, Pablo uses Swiftex exchange, and the link to Swiftex for the Pablo deal is in the description below. Thank you for your time, guys. I'll catch you for the next episode.